Have you ever looked at a giant company and wondered, how it's really doing? Forget the flashy headlines for a second. Today, we're going to give a massive corporation a full-on health checkup, and we're going to use the exact same tools the pros use to see what's actually going on under the hood. Let's dive in.
Okay, let's start with a number that's almost impossible to wrap your head around. In 2023, the Volkswagen Group brought in 322 billion euros in revenue. That is just a staggering amount of money, the kind of number that makes a company seem completely invincible.
But, and this is the big question, does a huge number like that automatically mean the company is healthy? Well, not really. It's kind of like knowing someone is tall, but you have no idea what their blood pressure is. To get the real story, we have to look a lot deeper. And that is exactly where these come in. Think of financial statements as the doctor's complete diagnostic toolkit for a business. They're the blood tests, the x-rays, the whole shebang that when you put them all together, give us a crystal clear picture of a company's true condition. So our first test is something called the income statement. The best way to think about this is like the company's fitness report for the entire year. It doesn't just show one moment in time, it tracks performance over the long haul to answer one simple question. Did we win or did we lose?
So what it does basically is it shows you the company's financial performance over a specific period. It starts with all the money that came in the door, that's the revenue, and then it subtracts all the money that went out, those are the expenses, to see what, if anything, is left over.
The journey from the very top of this statement to the very bottom, it follows a really clear path. We're going to start with total sales, which is the revenue. Then we just follow the money as all the different costs get subtracted step by step until we land on that final number, the net income.
Right, so step one for Volkswagen in 2023 is that massive top-line number we started with, 322 billion euros. This is the total price for every single car, every service, everything they sold that year.
Now here's where it gets really interesting. After you subtract the direct cost of actually making all that stuff, we're talking raw materials, the labor in the factories, you're left with what's called gross profit. For VW, that was 61 billion euros. See? A much smaller, but way more telling number. But we're not done yet. Next, we subtract all the other costs of just running the business. Things like marketing, research and development, all the administrative salaries. What's left over is the operating profit, 22 billion euros. This number tells us exactly how much money the company makes from its main, day-to-day business. And finally, after we account for absolutely everything else, like interest payments on their debt and, of course, taxes, we get to the final profit number, the net income. For Volkswagen in 2023, that number was 17.9 billion euros. This is what everyone famously calls the bottom line, and the reason is simple. It is literally the last line on the income statement. It's the ultimate measure of how profitable the company was. It's what's left for the owners after every single other person has been paid. Okay, test one is complete. Time to move on to our second diagnostic tool, the balance sheet. Now, if the income statement was like a video of the whole year, the balance sheet is more like a high-resolution photograph. It captures the company's financial condition at one single moment in time. And you have to understand, this difference is absolutely crucial. The income statement tells you a story, like, hey, how'd you do in 2023? But the balance sheet tells you where things stand right now, asking, so what's your exact financial status on December 31st? The balance sheet basically has two sides. On one side, you have all the assets. These are all the resources the company has under its control. We're talking factories, cash, cars on the dealership lots. To put it simply, it's all the stuff the company owns. And on the other side, well, we list all the liabilities. These are the company's financial obligations, what it owes to its suppliers, to banks, to investors. In other words, it's everything the company owes to other people.
And here's the magic trick. These two sides always have to balance. It all comes down to this one fundamental equation. A company's assets have to be paid for by either borrowing money, that's liabilities, or by using the owner's own investment, that's owner's equity. It has to balance. Every time. No exceptions.
So let's see this in action with VW's real numbers. On December 31st, 2023, they had 600.3 billion in assets. They owed 410.4 billion in liabilities. And look at that. The assets minus the liabilities leaves 189.9 billion in owner's equity. The equation balances perfectly. This number shows the company's net worth, what belongs to the shareholders.
All right, on to our third and final test. We've checked their performance, we've seen their financial position, but now we need to check the company's circulation. You see, cash is literally the lifeblood of a business, and the cash flow statement, well, it tracks every single drop of it, moving in and out.
Here's a wild thought. A company can be profitable on paper, but still go bankrupt because it ran out of actual cash. That's why cash flow is so incredibly vital to a company's long-term success. It tells a completely different, and sometimes much more urgent, story than profit alone. And this statement neatly organizes all that cash into 3 simple buckets. Operating is cash from the main business, investing is cash spent on things like new factories or maybe earned from selling old ones, and financing is cash raised from investors or used to pay back lenders. It shows you exactly where the money came from and where it went. So there we have it. We've run all 3 tests. We've got the results from the income statement, the balance sheet, and the cash flow statement. Now it's time for the final diagnosis, and that means we have to look at everything all together. This little table sums it up perfectly, doesn't it? The income statement asks, are you profitable over a period of time? The balance sheet asks, what's your net worth at one single moment? And the cash flow statement asks, where'd the cash go over a period of time? Each one gives us a totally unique and absolutely essential piece of the puzzle. And that brings us to the most important point of all. You cannot just look at one of these in isolation. It doesn't work. A company might look profitable, but it could have a crushing amount of debt. Or a company could have tons of assets, but be burning through cash like there's no tomorrow. It's only by looking at them all together that you get the complete, unfiltered story of a company's real financial health. And just like that, you now have the basic toolkit to peek behind the curtain of any public company out there. These same 3 statements are available for Apple, for Amazon, for any company you can think of. So there's really only one question left to ask. Which company's health are you going to check first?